Shares of Robinhood, they're sinking on the back of earnings. Comments from the company as well. Kate Rooney is looking at what comments the street has today. Hey, Kate.
Hey, Scott. Wall Street today is really focused on that slowdown in retail trading activity that Robinhood has warned about and reiterated in yesterday's report, as well as that unpredictability of Robinhood's booming crypto business. Revenue more than doubling in the quarter for Robinhood. It did report a loss. That goes back to that big debt raise back in January. Crypto, though, really stealing the show for the quarter. I talked to CFO Jason Warnick after those numbers crossed. He says crypto in the quarter, quote, showed up in a way that they have not seen before. It drove that higher revenue number as investors moved from stocks to digital currencies. Equity trading was basically flat from a year ago. And for the first time, more new Robinhood customers bought crypto instead of stocks. Crypto made up more than half of that key transaction-based revenue. About 62% of that, though, came from Dogecoin trades alone. Wolf Research out with a note on the quarter that really summarizes what I'm hearing from other analysts today. They say that softer guidance for the third quarter is really dominating the narrative around the stock today. And they say, yes, crypto growth, as they put it, is nothing short of remarkable. But the outsized contribution from Dogecoin simply cannot be ignored. The Q3 slowdown, as they say, could be much more acute than what investors were anticipating. Scott, back to you.
All right, Kate Rooney, appreciate that. So, Dr. J, what do you do with your position here that you had? I mean, you at least told us you had one. What's up with it now?
Yep, I did. I had to exit it, Scott. So what I did, as you know, I sold the straddle about 10 days ago or 2 weeks ago, and I bought the 55-75 spread in September. Took a lot of money out of that straddle as the vol came down. And I was into that call spread for $3, as you probably recall. That call spread fell to that same $3 yesterday from about $6.50, $7 a couple weeks ago. So I'd taken some profits, exited the rest yesterday. And today, you know, the stock's $45. So it's not like I've given up on the stock, Scott, but I gave up on that spread because it was just too far out of the money. I think a lot of the most recent turn in crypto, which has happened just in the last 2 weeks and is not part of this report, I think a lot of that will drive volumes. And as you've already heard, the consumers or customers there, 21 million of them active, a lot of them trading crypto, 60 some odd % of their revenue coming from that. I think that's going to be much bigger in the coming months because of this big turn crypto's made from Bitcoin under 30,000 to now back over 45,000.
Josh Brown, I mean, this is always one of the most searched names on CNBC.com, especially when there's news around it. There's obviously high interest. So what do you tell people who are witnessing a pretty large decline in a name like this?
Well, Steve Weiss and I were both on the show the day they came public, and we both said something that at the time sounded controversial, but I think last night's earnings report validates what we were saying, which is that basically this is a platform for gambling. And it's not an insult. Gambling's fun, okay, dude? Like, it's all good. But if you're telling me that, like, a quarter of the money they made came from Dogecoin, then let's not say that this is an investing platform. It may someday turn into one, but those 22 million accounts that John cites, the average balance is $4,000. What are we talking about? What are we, like, literally, what are we talking about? I think the analysts who cover Robinhood should be the same analysts who cover DraftKings, as opposed to the other brokerage stocks. So I don't have look, I don't want the company to not do well. I do want their investors to do well. I do want their users to do well. But, like, if you're putting your money into this as an investment, then you're investing in the speculation of others. And there's nothing, you can make a lot of money doing that. It's just not what I personally want to do. So I don't think it was a bad quarter. I just think, let's be honest with where the money they're making is coming from.